welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host today for, NVIDIA's earnings. Let's call it that, because that's really what everybody is talking about, and rightfully so. So NVIDIA always chooses to announce earnings at the end of earnings season, and everybody waits in anticipation. Every big company that's out there kind of hopes that NVIDIA mentions them in their conference call, because it's usually a boost for the stock. I guess the fact that companies are buying the latest chip is usually a good sign for that company. At least the markets seem to perceive that. So with NVIDIA, let's go. We set up a trade. We just wanted to get long NVIDIA, and we started by just doing a long call vertical spread. But I did say that we would probably set up a new trade today. So let's run to the Tradier Pro software. And in that software, we will look at the NVIDIA trade. So let's pull up the Tradier Pro software. And here's the trade. Quite simple. We are looking to go out to quite a bit in time. As a matter of fact, I build this more as this isn't necessarily all about the earnings. We're not speculating. We're speculating that the earnings will be perceived as good and the market will continue on up. We've had a little bit of a pullback in NVIDIA, and I would call it a consolidation period more than anything. And now we're hoping that the earnings can be a catalyst that can drive the stock higher. The trade that we're looking at doing goes out to the October 3rd expiration. We bought the 175 strike, which is just a little bit in the money, and then sold the 210 call strike. Now, that also allows us to adjust this trade. We can always roll the long call option down in strike after implied volatility comes out a little bit, if we choose to. So if this gives the stock a lot of room to run, we have a plan that if the stock doesn't hit the 210 level, we can adjust by rolling this call option down if we would like, and try to bring in more premium to try to offset some of this risk, because we are paying up. We're paying $14.23 for the 175 strike call. Well, when we put the trade on, we're actually up a tad a bit on the trade that we put on. Was it Monday? I think it was Monday that we put on the trade. Might have been Friday. And NVIDIA, we paid $12 for that. So yeah, we're very close to it. If we send this to the ticket, we were $12.15. So we're up a smidge. We're up 15 cents on this trade at this point in time. Not that big of a deal, but I do want to remain long it and do have a plan. This to me is more so about just owning NVIDIA at a decent price than it is about speculating on the event. Now, if the market does go down, we'll do what we got to do on the trade. If NVIDIA ends up moving down the expected move instead of moving up, which by the way is right around 20 points, the expected move is right now, that would be the long at the money straddle. So, I thought I had NVIDIA in here, NVDA. So the long at the money straddle, actually for the short term, it's less than that. If we look at the August 2nd expiration, all right. One standard deviation move is 20 points. That's what it is. Okay. So this is the expected move right now. Close this out. $11.80 at this point in time. Man, that's vol is 103 on NVIDIA. It's only 58 going out to September 5th expiration, 9 days away. One standard deviation move is 197.50. Man, that just feels low for NVIDIA. But oh well. In this instance, we're 104 is the implied volatility on the short term. This only has 2 days to live. So NVIDIA is going to announce after the close today. And then you have all day Thursday, all day Friday for those option contracts to trade. So my speculative trade that I'm looking to do is I'm going to go a little bit in the money, and we're going to set up an open wing butterfly as an alternative. We've already got a long call spread. I think of the open wing as an alternative to either a long call spread for a net debit or a long put spread for a net debit. You're going to open up one wing, allow this thing to run. But one of the biggest advantages of an open wing butterfly as opposed to a long call spread, if you just look at it on a one unit basis, is that you're selling two option contracts with pumped up volatility as opposed to just selling one. So they're a little bit cheaper, different risk reward profile when you put them on. But I'd rather cheaper is good when I'm thinking about earnings. And that it's a speculative play. I don't want to put up as much capital as we did with our long call spread, but that we went out quite a bit further in time. So this is an alternative. This is a speculative play. This is just all about earnings, and this is the trade that we're going to do today. And this will be our paper trade for the day. So now you can go. I don't mind going out to the September 5th expiration. And keep that in mind. Maybe I'll set them both up. A little bit less speculative in my mind to add a little bit more time. But I'm going to do the August 2nd one in this instance. So we're going to clear these out. This was our, well, now we're down on it. We were up. Now we're a little bit down. So NVIDIA is 106, 181.69. When we put the trade on, NVIDIA was 181.70 or 181.28, 181.66. So it's like vol has came in on the I changed it up. All right, never mind. Ignore me. Here we go. Here's the trade. We're gonna go a little bit in the money by the 180. We're gonna go up to. Do 190. Expected move was around 11. We'll do the 190. And we'll sell that one twice. And this is 10 points. And we'll come down and we'll do 5 here. And we'll pay the ask. And we're $3. Okay. And we'll send this to the what if calculator. And that's not bad. If we go above, if we blow the numbers out, we're going to make $2 approximately. Let's call it $3. I hope it grabbed 3 when we put it in here. And it did. All right. So almost 3, because you focus over here. Our profit would be 200 on our 1x2x1 open wing butterfly. If the market goes above 195, if it goes above 195, this butterfly will have to trade for $5, which is the difference between the long spread, 180 to 190. That's 10 points. Minus the short spread, 190 to 195, that's 5 points. That means that the butterfly, if it's above 195, will trade for $5. You have 10 points that are good, and you have 5 points that are bad. That nets out to $5. We pay $3 for the trade. Market goes anywhere above 195. We're looking to make $200 on our $300 speculation trade. Market goes down below 180. We're down to 300. It's going to be very hard to salvage much after the earnings report. If the market does go down at least the expected move 10 points or more to the downside, there won't be much left in this. So be prepared that if I do pay the $3 for this trade, that is going to be my max risk on the trade. Now, ideally, it goes to right here, right at the 190 situation, and it hangs out for 2 days. If at expiration the stock stops right at 190, we would be up about $700 on the trade. Once again, focus your eyes over here. That's about where it is, right at that level. And that means that the butterfly is worth $10, and we put it on for $3. And so we could get out at $7. A nice risk reward scenario. But the odds of it going out right at 190 are fairly low. But it could hang within this range, right? It could say 187, 192. We're still pretty good. Where anything within the range is solid. And that is right, just a smidge below what the expected move is at. but it's not as much as an one standard deviation move. Okay, so let me pull it down if we want to look at that. This is going to be the paper trade for today. Oops, and I should have set up our SPX trade already. Okay, we have 2 more days before we start heading into the holiday weekend, and we're going to do 2 more trades. Now, we do have PCE on Friday, so Friday will, well, it's going to be before the open, so that will already be factored into the prices, so it won't be that big of a deal. This is the trade. If you wanted to grab the screenshot of it, $3. It's still hanging there. Announcing after the close. I like this trade. I do like it. If you want to go out one more week and give it a little bit more time to run, feel free to do that. And the only reason why you would do that, in my mind, is sometimes NVIDIA can have good earnings and it sells off, but eventually it comes back. They just take that as an opportunity, buy the rumor, sell the news scenario. And then that week will give you an extra, a little bit more time. But ultimately, you have to be bullish on NVIDIA to do any of these trades. And if you don't believe in NVIDIA going forward, yeah, then this isn't the trade for you. October 3rd is the long spread expiration. All right, let's do our SPX trade now. So the last few weeks, we've decided that we're going to come in and we're going to do a daily SPX directional open wing. Excuse me, a little bit of frog in my throat. Directional SPX butterfly based off of the fact if the SPX is up or the SPX is down at that time. So we're looking at the 0 DTE. It only lasts for the rest of the day. Usually you want to do it as quick as possible. 11 o'clock is usually when you want to get these things set up. We are in the green today, so we're going to lean to the bull side of things. We're right at one. I've mentioned more times on the show, I like it to be right at the money, but we're not. We're right in the middle, as a matter of fact, almost the worst spot relative. All right, let's do it. We're going to see where we end up with it. The VIX right now is actually up a little bit. It's at 1587. If you're interested in VIX trades, we talked a lot about VIX trades on Monday, so you can go back and review the video if you wanted to. And here's our call butterfly. Buy this one. Sell 2 of these and buy one of those. Yeah, 428. 478. So this is more expensive than we've been paying. We've been paying around 330. So we're once again a little bit more expensive. 64. So we're at 64.78. $4 in premium we're selling. 0 DTE. This premium seems a little bit low. Let's try adjusting. Let's go down the other way. Let's go the 65, sell the 75, and buy the 80. 470 didn't help much. All right, well, we're putting it on. We're going to move forward. This is almost $1 more than what we've been paying for it. And that has a lot to do with volatility, has a lot to do, and remember that the VIX is 30-day vol. We're looking at daily volatility, really. Obviously, you'd want to look at the 1-day vol. I'm not going to try to pull that up here. And that's what really is affecting this. This premium, this is cheaper than we've received in quite some time. $4.20. We're in the 0 DTE. Well, let's put it on. All right, so we're looking to buy the 64.70, sell 2 of the 64.80s, and buy 1 of the 64.85s, paying $4.20. We'll say $4.30. That will be what we'll pay, and I'll take a screen grab of it. Okay, remember, you put this trade on. It's all about theta to start, and then gamma and delta and gamma take over. So we're look to get out around 2 o'clock. If we have a decent premium, if we're doing okay on the trade, we're going to take that. We're not looking to try to get a home run. We're not looking for it to go out right at 64.80, right at the expiration date. between 2 and 3 o'clock. We're going to be out of the trade 2:30 ideally. And if the stock doesn't move at all, and let's say we're just flat or a little down on the position, we get out. That's when we get out. That's our time. We're not going to risk the delta and the gamma explosion as expiration approaches. If you want to try to manage your trade and say the market does go outside of the wings, or you're down more than half of what you've invested on the trade, well, feel free to do that too. So anytime within the next hour or so, if you can make $1, if you can make it $2, all because of time decay, definitely do it. Definitely take the trade off. If it's 2 o'clock or so and the market really hasn't done much, you're going to take it off then too. So very, very short-term trade. It's not something, if you're doing zero DTE trades, you're not going golfing after you place the trade. You're going to want to watch it. You're going to want to stick around, or at least have the ability to trade out of it at any point in time. And 11:17. Okay, let me check and see if we got any questions, comments, concerns. Good morning, Kurt. I do see that. I appreciate that. And I don't have anything else set up for today. Let's review. Well, let's go back and send this one to the trade ticket so that I can put my slide together. I'm going to put a presentation based off of all of these zero DTE SPX butterflies that we've been doing, and my screenshots that I'm taking in the end of the day and following along with the trades and see where we're at. This is our profit and loss graph for the one that we just put on, and we will review them, and that will be the Monday holiday, Education Monday, we'll call it. And it will be all about these zero DTE SPX trades. And then if we want to continue, it doesn't mean we'll stop doing them, but I just wanted to do an experiment over a certain period of time based off of what the markets have done. And overall, the trades have not done bad at all. Maybe had one actual fairly big loser, and then everything else I think has been a limited to, or has been good to limited upside so far on those trades. And now here's the NVIDIA long butterfly, and that is that alternative. And then we also did a long butterfly in the VIX. Hasn't really changed much, but this is the butterfly that we talked about on Monday's show in the VIX, trading at about the same price. We see the September futures contract trading right around 17. This trade wants the market to hang out around 17. We also bought an 18 strike call, but we're still profitable anywhere above 18 on this trade, or anywhere above 17. We're profitable on this trade. And that's the trade that we put together for the VIX on Monday. Oh, all right. Did you mention NVIDIA? Doug just jumped in. I was late. Doug, shame on you. Yes, we did mention NVIDIA. And here is the long vertical that we put on a while back, and that goes out till October 3rd. And that's just simply buying a little bit in the money and selling something way out of the money, but you're getting some premium for it because you're going way out of the money. And then we also looked at, here's our long butterfly speculation. And here's the one thing I do like about this trade, and here's part of the reason why it's interesting to me, in that we go a little bit in the money. You pay $4.30 for it. That means 180 plus 430 is $184.30. And right now, NVIDIA, I don't have it over here, is, yeah, I do. There it is at 181.69. So it does not take much of a move to get to the break even. Now, the expected move is $11 on NVIDIA, and the shortest option, shortest term time frame. So that is very, very feasible that we can get to the break even. And even if you adjusted it down, you can make the break even. You go down to the 175. You can make the break even right at where the underlying stock is at. So the fact that we're selling 2 option contracts in the butterfly as opposed to just doing a long call spread means we get to capture double that implied volatility. Also means that we lower the cost basis, we lower the break even on the stock. But bottom line is the news has to be perceived as good for this to work out. If the marketplace does not think that the earnings are positive or the comments spook them, then this market's going to go down and there's not going to be much left on the trade. All right. So I'll send the NVIDIA trade over. $3. Yeah, not bad at all. Well, actually, yeah, 180.84. Why did I think it was $4? I think that's for if we went a little bit further out. So it's 183 plus 3 would be $183 as our break even. I think the $4 trade, doing so many shows nowadays, I get them confused. NVDA, I think that is if we do the September contract. So it's going to be a little bit more than $4 on the September. If I did September, I would actually do the 15 points by, I'm sorry, the September 9th. September 9th, I would go 15 points. Buy, and then sell 2, and buy 1. So here we go. Let's look at this one going out one more week. Dang it. Come on, Brian. Buy, sell 2, and then we'll only go 5. Yeah, 477. This is what I had envisioned in my head when I was thinking about the break even. So now in this trade, if you go out one more week, you have higher potential. You need the stock to go higher, 195 versus 190. You're paying 477 for it. The expected move, or about the expected move if you go out to the September 9th expiration is 197.50. That's about where the 20 delta is. The one standard deviation move is just over 200. And if we look at the chart in NVIDIA, that is actually a very interesting area, right around 200. $185 is the most recent high. 200's all the way up here. 185 is where we're at. 190 is what's in play. Bouncing off the 20-day, we got the 200 down. We got all the ducks in a row, but it's probably a good thing that it broke through that 20-day moving average just before we hit earnings. So we've really consolidated here, just trading in it. I like the trade. I like them both. I like the September 5th trade, a little bit more upside, paying 477, paying a little bit more risk, a little bit more upside. And I also like the shorter term trade. Which one was it? This Friday. That's the 29th. So this Friday is the 29th. This is the $3 trade. Okay, there's that one trading for around $3. And then this is the longer term trade, a little bit more upside. And this is 477. Let's send that one to ticket. 472. Those are the two alternatives. All right, everyone. That's it for this edition of Options Guide TV. Happy NVIDIA earnings day. Go out and enjoy the day, if you will. And we'll see what happens on Friday. PCE, a big number Friday morning. And we'll look to add one last 0 DTE butterfly as we head into the holiday weekend. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.